Good morning, good morning. How's everybody doing? Well, we had a perfect look above and fail yesterday on the 76.31 level. We had a really nice look above, only by 2 ticks. We went to 32 and a quarter and then right back down. So we were telling people, you can short in the overnight because the bid's going to drop. And you can see still that overnight low is right where the previous day low is. So we're still in distribution, right? It's not completely fallen apart, right? But we weren't expecting it to completely fall apart. I want to show you guys something. If you take and look at all the sessions, I put in the overnights too. If you take this previous day low from yesterday and draw it out, you can see that the move that went and took us up and over, right? This is the inventory that we took, and we've been selling it up here for days. And so now that's that back and forth motion that I talk about. When markets go up and then they go sideways, that's where the trade is. The trade is that sideways motion, right? Until we clear 76.31 to the upside, and I really, really hope we don't. Really kind of hope we get some sideways motion and lower over the week. That would be perfect. You know, it'll give us better trading. Liquidation always creates better price action. You know, liquidation always creates better price action because we get, it's almost like, it's a strange way of saying this, but liquidation is like, it's like greasing the wheels, right? You you grease the wheels of the market. You get some nice order flow because markets are supposed to be two-sided. Doesn't really seem like it a lot of times, but markets are supposed to be two-sided. And when you don't have a two-sided market, they're very difficult to trade. They're a real pain to trade. They get sticky, like ones that just keep going up, you know? So liquidation is kind of like, it's like WD-40, on a sticky screen door. But right now, overnight inventory is short. I'd say about 95% of the volume is underneath yesterday's close, but it has corrected significantly. You know, off the lows, what was our low? 76, 76. So if you on, that's that, you guys talk about a V shape. That's the V you're getting. So let's see what happens. I've got the balance zones drawn out. Let's see what we got. So the balance zone was 77 quarter to 81 and 3/4, right? Double it to 75.90 and double it again to 76.08. There's yesterday's balance on that distribution. I just left that in for curiosity to see if we get up there. But right now, if you look at the chart, we are doing the typical Globex. Right now, the selling is shut off, right? So every time the selling shuts off in these markets, the trading gets a little crappy, right? So, hey Sean, how you doing? Sorry I didn't see your comment there on YouTube. So right now it's sticky. You can see that the pullbacks, it goes up, pulls back, bid, goes up, pulls back, bid, goes up, pulls back, bid, right? So trading this is a tougher trade, right? We like to look below and fail at an edge, right? We love this trade here. If it came down and did this, right? But when it stops kind of in midair, it's a little harder to trade. It's tradable. You can buy that pullback, but you have to have a place to put your stop, right? And you have to have awareness of where you are. So when you're breaking into a new zone and it breaks above 75.90 and then pulls back but doesn't take out 75.90, you could buy the 92s and use 90 as your stop, right? Now that is not an A plus setup, okay? I was talking to someone yesterday and they were saying, there's not a lot of A plus setups, so how do we adapt? Well, this is how you do it, right? You do it because you have to. You're forced to take more risky trades, right? So what you want to do is you want to get really, really dialed into the chart, you know? Because when you're not taking a perfect A plus setup, the level of skill and the level of, how do I say this? Well, yeah, the level of skill required is a lot greater. So what we do is we try and teach you how to do the A plus setup. So when stuff like this happens, you're actually able to trade it. Right now, this would be the best one because it pulls back and there's your edge. So when it pulls back and you see those candles going like that, and it lifts back above 93, then you can buy this level, right? You can buy this area, but if it breaks these candles, you're probably going to get stopped out. Do you guys understand what I'm saying? Same here, right? It's tradable, but you have to be quick. Guys, can you hear me? Hello? Right? Give me some feedback, guys. Let me know you're listening and, otherwise it just feels like I'm talking to myself. Okay? Right? Let me know if you have any, does it make sense? And, you can also say, well, JJ, it's hard to do this because, let's talk through it because the object of this stuff is to try and help you guys become better traders, right? And this way you can at least, scrape out a few points here and there, right? So in markets when markets change, right, we have to adapt. We have to adapt our trading methods. Now the problem is most people don't have the simple basics down, right? So when they don't have the simple basics of trading down, they'll look below and fail, learning how to manage positions, learning how to manage risk. When they don't have that simple stuff down, it's very, very hard to adapt and do these more complex trades. This is trend trading. Like it's actually inside. It's an inside day, but it's trend up, right? You can see that there is a trend. The overnight point of control is all the way down at 75.78, and we're distributing right at 76.02. And while everybody is looking for a short, right, people who can trade a trend will buy these pullbacks, right? But it's a very risky trade. It's not at all easy. I'm not going to lie to you, right? Not going to lie. It's not easy. And it doesn't happen very often, but when it does, we want to make it tradable. And we want to, the most important thing is to manage risk, right? Managing risk is the most important thing. Because if we're not managing risk, it's really, it's not worth doing, right? We have to manage risk. There's just no way of getting around it. And let me put that into simple terms. If you don't have any money, you can't trade. If you blow up accounts, you can't trade. Yeah, if you're a baker and you burn down your bakery, you can't make any bread, right? If you're a surgeon and you kill all the patients, you're not going to have any patients the next day, right? So we have to manage our risk. So consider this, consider, learning how to do this, right? It's not going to be easy. You are going to screw it up at first, right? You know, somebody yesterday, it was an interesting day yesterday. Somebody was really, you could feel the frustration there. How do you deal with the frustration? How do you deal with it? You just got to embrace it. There's nothing else you can do. But if you manage your risk, if the trade goes south on you, at least you have an opportunity, you have a setup, right? And what you're doing is you're buying that pullback. When the wholesalers put the market on sale, you're buying that pullback. Now, trend traders, what they'll do is they'll draw a trend line and they'll try and do that. But sometimes when it breaks trend and comes back up over, you can probably buy it now. I have trouble trading off the lines that aren't horizontal. So what I do is I have these levels and they tell me, okay, the other thing is awareness, right? So if you are buying it here, right, you're expecting a move and you know where the sellers are going to be. So say you're buying 93 and you got your stop is under 92. Sell, you're going to be selling at 97, right? So when you get out of these trades, you're not expecting this whole move. To capture this whole move, you need a bigger account, right? And you have to be really good at risk management and management of the trade. If you can't, then don't do it. But take a couple of points, take a couple of points, take a couple of points. Get it? That's the only, otherwise you're just going to be sitting here and you'll go, JJ, you're not helping me. I'm missing the move, right? So that's how you trade this, right? You buy the pullback, but you have stops. Because if it breaks these levels, right, what it means is, now this is important. If you buy 93 and you put your stop at 92 and the market comes down and offers at 91, 90, that means the sellers are forced to lower price. They're forced to lower price. If they are forced to lower price, you are buying inventory that is mispriced. And you must exit the trade. Does that make sense? Right? If the inventory is mispriced, you must exit. How do you know that the inventory is mispriced? The chart will tell you. Your stop will tell you. Now, the closer we get to the top of the zone, right? The closer we get to the top of the zone, the harder this trade because we're starting to buy inventory at 4 times cost basis. So now London has just opened, right? London usually tries to get us a discount. Usually moves lower. I want you to look at London open, went down 1 tick. right? It's opened and gone down one tick and then straight back up. What is that telling you? Are we getting a more discount at London? So far, no. In the first 2 minutes of the London Open, there is no discount. Get it? If we take out 7601 and then 7600 and then come down underneath 75.99, you'd be looking for 75.95. But right now, you can tell that they don't have to sell cheaper. So London right now is not, at this time, is not getting a discount like it usually does, right? Exactly. In quick trades, and the closer we get to that 7608, the less you want to do this. So now you have situational awareness. At the bottom of the zone at 75.93, 75.95, 97, those areas, the trade makes more sense because we've established that we're in 4 times cost basis and the buyers are there, right? But very quickly, this can go wrong if you're buying at the top and hoping for a huge move. That's delusional, right? So you can't lose sight of common sense, right? You cannot lose sight of common sense. Make sense? You get it? That's why we do these cost basis zones. So you know, hey, if I'm buying the market at 2 times what they bought it for, right? Remember, the volume point of control is down here at 75, 78, right? So all the inventory is priced here. This is 2 times profit and this is 4 times profit. So you know, the higher it gets, the price, the more, you know, the more, it's more difficult to get that bigger move higher. Tonight we're doing so because we had the first liquidation we've had in a long time, right? We haven't had a decent liquidation in a long time, and you got a ton of people coming in and buying, right? You got a ton of people coming in and buying, and the trapped longs from last night are all have been liquidated, right? So this is what fancy people called situational awareness, right? Situational awareness is a fancy way of saying, let me put this in a very street way. Situational awareness is just a way of saying you don't have your head up your butt. Okay? That's all it is. All right? It means you can see where you are, you know where your place is. Right? Very important. Okay? That's why we do this, right? We want you to have awareness of where you are so you're not trying risky trades at the top of a cost basis, right? So far, I don't see a seller. You know, everyone's aching for a short. Our perfect short would be a look above and fail of 7608, right? If we get over 7608 and come back down and they're forced to put it on sale, then we got a short. But till then, right, there's no reason to short it. No reason to short it yet. See how small the candles are? The buyers aren't, they're not like racing in, right? The buyers aren't, they're not just like racing in, but they're not running away either, right? Look how small these candles are, right? Exactly. Not when there's buyer. So, what if you're not buying the pullbacks? What if you're not long, right? No, it's there's not real signals, right? Singles, right? But Moran, you can tell that here when K took the high of J period and when they took the high of H, anyone who was using those levels as a stop is trapped short underneath, right? So anyone who was short earlier in the evening with a larger count, what they've done is they've gone and they've used that and then and later that as a stop. So there are trap shorts under here. So if we pull back, that is a place where you'll find a natural bid, right? You'll find a buyer here because the people who are short underneath will be sitting there putting buy orders here and here and here and here. But that'll be the first place, right? If it takes the L low, you'll see a little bit of responsive buying. If a big seller order comes in, of course, it'll just drop the market. But if it's just light selling, it'll pause there and most likely bid up, right? Very good. So there's no actual single prints there, but you can tell that is a small detail, right? That's a very small detail that shows you that anyone who is short under this level and under that level, right? Say people who, and people do, large traders would use that as a stop, and we've been under that all night. So if that stop gets taken out, like it just did, there will be bids, just like here. When London opened and took the K high, when the market retraces down to 76.02 half, there should be some bids there, right? Really good situation. That's really good, Moran. Very good. And you don't have to have market profile to see that. You can just see that on a half-hour candle chart, when the candle takes the high of the previous candle, people who were using that as a stop, because they'd be short here, stop here, now their stop gets taken, right? And then there are a lot of large traders who don't use hard stops. So when the market comes back there, their software will put bids in, right? Great observation. Really got a good observation. You can tell Moran's, she's been with me since pretty much the beginning of the room. And it's really cool to see that, your powers of observation are very good now. So when they cover their shorts, there should not be more buying because the short already covered. See, the thing is, David, this is a great question. If you were short 1,000 contracts, you can't buy them all at one price level. So it's not like you're short three contracts and you're covered and the market will drop. Get it? You have to cover size. That's why they put multiple bids down there. Because they're trying to buy back a size position. That's why they don't use hard stops. Yeah. And that's what a lot of people don't get, that size traders don't use hard stops. They can't. You can't use a hard stop on 1,000 contracts. Everybody will see it and run it. You cover where you can, right? When you're a size trader, you have to cover where you can, not where you want to. That's one of the hardest things for retail to understand because they've never traded size. And the other thing is there's competition. So you're trying to cover size. Raj is trying to, like, you're short 1,000. Raj is short 500. Ian's short 3,000. Moran's short 2. That's why you have a lot of competition. Just like here, the sellers are competing at 5.25, right? The sellers are competing there. And what did I miss this morning? What have I not put in? I have not marked VWAP, right? So I should go do that. Little unorganized. So now what happens? Now what happens? So if you're shorting, say you want to short, right? Very simple, right? Say you're like, I gotta short this. You see a seller, you short this, right? You're like, okay, I see a seller. I see they're competing there, and I want to short that. What do? Go grab some micros, and you sell the 4.25, 4.5, right? Because you're shorting because now they're going to put it on sale. Where would you bid it? I'd put some bids down under 3, like a 2.75, right? Where's your stop? Well, your stop is 5.25, 5.5, right? Because if you lose that seller at 5.25, right? Watch, it's going to come up here. If those sellers do not move lower, if they start to lift, if the sellers start to lift the price that they're willing to sell at, it means they've seen buyers, and you should scrub that trade. Do you guys understand that? This is how you short where it's not at an edge, where you identify after 1, 2, 3, 4, 5, 6, about 10 minutes you've seen a seller at that level, right? So that's where your stop is. That's your backup. If you lose your backup, it could move like this very quickly. And there's no reason to be short, right? No reason at all. So if you're short at 4, 4.25, put a 5.5 stop in, because if it takes out 5.5, or if you want to let it work, you can move that stop to 5.75 or 6. If you're feeling like Daddy Warbucks, right? But if it takes that stop, there's no reason to be short if they're going to raise price up to 6.5, 7, 8. right? You need those sellers. See how they came in here? They were here, now they've moved down here. But it's see how slow and painstaking it is, right? So that's how you short when you're not at an edge. You have to identify a seller, right? Exactly. 5 1/4 is your business season. There's a 5 1/4 seller, multiple sellers, and they're competing there. If those sellers go away, your goose is cooked. There is just no reason to stay short if the seller goes away, right? Just no reason at all to be in a short where there's no seller. It makes no sense. And people don't understand that they're like, oh, it's too high, it has to go down. No, it doesn't. It needs a seller to go down. If the seller's not there, there's no reason to be short. Short selling is really simple. The execution of short sales is frickin' complicated because you have to understand how business works, right? The reason for a short is that price is being put on sale by multiple participants, right? And if the price goes sideways, the danger is when you're short, it can bring more buyers because buyers see that as stability. And that's the worst thing, right? So sometimes you can sit in a short for hours and then have it go against you, right? That's why hit and run shorting is the best way to put your finger in there, right? So I'm short at 4 1/4. It's at 5 right now, right? I'm just doing it on 2 micros. And if I see it, see now it's 5 and I'm short at, sorry, 4 1/4, right? That seller, that it's like this, I'm holding on by my fingernails here, right? So, if you were short any kind of size here, if it starts taking out 5 1/4, start buying them back, right? Don't be stupid, right? Because if it stalls, and as soon as these sellers see a buyer or a bunch of buyers come in, they're going to lift that offer from 5 1/4 up to 6 to 6.5, right? Very important. It's a very important skill. And that's why shorting is very difficult because you have to watch this. And to watch this, you need to have concentration. You have to be able to focus and concentrate. And in our trading society, we've unfortunately trained traders to have a 30-second attention span. Well, let me make that 10 seconds. So what happens is we get all wrapped up in, oh, okay, in and out, that kind of thing. This way, if you sit and you watch this, like right now, it's slow in the market. This is a beautiful learning opportunity. See there, look, right? So I'm already out of that trade. I am flat, right? Because we've lost the seller. Seller is gone, right? So you admit you're wrong, you lose a couple of points, big deal. On some micros, you lose $10. Now you stuck your fingers in the order flow, and now you know what's really going on, right? Exactly, Moran. The seller's gone. When the seller goes, you go. There's no valid business reason to be in a short if the seller is gone. Beautiful, right? There is no business reason to be short if the seller is gone. Well done. I was wrong. I admitted I was wrong quickly. There's no reason to add to the short here. See? There's no reason. It's okay to take a short and be wrong, right? Just don't mortgage your house to do it. You know what I mean? Right? Don't overdo the risk, right? Just be very careful when you're shorting markets that are at all-time highs because the supply just runs out like that. Hmm. Exactly. 3 3/4 was a look below and fail. Yeah. She's talking about this right here, right? That's a clue right there. A very small clue, right? A very, very small clue, but a very important clue, right? To do this kind of trading where it's not at an edge, your attention and your focus has to be like so dialed in. You can see that Moran today is dialed in, right? You have to be good at admitting that you're wrong, right? You and I'll tell you what, Marcus, the best risk management, the best capital preservation comes from humility. You're humble enough to let the chart tell you that you're wrong. When you start fighting the chart, that's when people get into a lot of trouble, right? When they think they know more than the chart, that is a recipe for disaster, right? That's when you blow up accounts. History is full of people who blow up firms, ruin financial institutions, lose all their investors' money, right? Right? I've seen it over and over again. There was this guy at my firm, and we were doing some arbitrage between Canadian and US, and he got the exchange rate wrong, flipping from US to Canadian. And he stuffed the trade in an error account. And the loss got bigger and bigger and bigger. Then he tried to trade his way out of the loss, and the loss got bigger and bigger. Because this was before, I don't know, our CFO, I think, was a little bit, he wasn't the sharpest knife in the drawer. And for some reason, I don't know how he hid this loss, but after about a year and a half, it had grown to like $400,000, right? And then he ended up quitting the firm, and the firm had to sue him to try and get the money back, and it was just messy, 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 right? But I've seen it happen. Nick Leeson did it with Barings Bank. He let that bank completely blow up, right? Oh, he's People could hide losses all the time. Before this electronic age, everything was kept in paper form. So traders would hide trade tickets. Oh, it was brutal. It was absolutely brutal. People would hide trades. It was just brutal. Yeah, we can't. That's why retail's trading so hard. You can't cheat. Why does VWAP go flat? Because it's slow. The simple answer, sorry, Symphony, is that it's slow, right? When the markets are slow, VWAP is flat. When it gets at all volatile, it'll start to spike up or down. And I'm sure there's a mathematical, technical reason that I'm not talking about, but don't worry about it. All you need to know is when it's slow, VWAP is flat. I don't like taking trades off of VWAP, right? Unless it's like flat, 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 like flat as a surfboard, right? Like here, when it broke VWAP, you could have bought, 87, 88, put your stop under VWAP because it was nice and flat here. But if VWAP starts doing one of these things, right? If VWAP curls like this or goes like that, just leave it alone. You know, it's a slow morning. That's okay. So now we finally found that seller that's starting to reduce price. So my short, if I had shorted now, this is what I was looking for. I was short those threes, right? I was short the threes or the fours with my stop at 5, and then I was looking for bids at like 2 3/4, 3. That's what I was looking for. You can see I was way too early, right? But then there's bids here again, right? You just got to be really patient in this market. And patient means smart, right? When I say patient, you think smart, okay? So if I say be patient, that means be smart. Not like patience. If you People hate that word. They hate being told that you have to be patient. They hate it. They hate it. They can't stand it. As soon as you tell someone to be patient, they blow their account. There's a guy in our room, he does it every time. I'm like, be patient. JJ, I blew up my account, right? So I try and replace patience with be smart. If you're smart, you'll be patient. That's simple. All right, folks, that's it for me this morning. Those of you on YouTube, if you want to learn how to do this and run a proper small business, we'd be happy to help you. Come into the trading room, tradingsyndicate.org. I'm JJ. I'm vwaptrader1 on X. I'm supposed to say, oh yeah, like and subscribe. That would be very helpful. Thank you. And we will see you at 9:15 a.m. Okay? Wait for your setup. Wait for your setup. It'll come. It'll come. It'll come. Okay? Thank you, everyone. Stay out of trouble, and we'll see you on the next session. Bye for now.